Hello, good morning. This is Ayazuddin Shamsuddin Khan from Pune, Maharashtra State, India. We are around the basic things about Income Tax Act 1961. Today, we would pick up from our surrounding of basic things the phrases non-resident, not ordinary resident, non-resident, non-resident Indian and resident. These four categories: non-resident, not ordinary resident, non-resident Indian and resident. Just I want to tell this thing. Four phrases today. Right now, we would rather go to discuss these four phrases. So these four phrases are no doubt very important. They have got practical importance. Anyhow, though these phrases are important, very important, and very assertive also, they are very assertive also, still we'll keep their discussion, or rather we'll keep our discussion on them pending for some time. We'll no doubt touch and try to understand what they want to say. Before that, we'll go into the background of these four phrases. This background of these four phrases is very, very important. It is rather more important than the understanding of these phrases, these four phrases. This is more important. Background is more important. So, let us go into the history of these four phrases and have what you call good background knowledge about these four phrases. So, let us start and see the history of these four phrases. Non-resident, not ordinary resident, non-resident Indian and resident. Why these terms have come to life? Why these terms have come to life? This is this is important question before us. Why these terms, four phrases, come to life when we are living in the modern age of technology? You know, our age is the age of technology. We have come together. We have come very near to each other because of the modern technology. You may be other side, I may be other side or opposite side of the world. Still, we can see each other. We can do business by looking at each other. This is the wonder of present technology, modern technology. So, modern business, they have exploited, rather used this modern technology to the fullest benefit. Businessmen all over the world, they have used this modern technology to the full, they have put rather modern technology to the fullest use. They are using this technology and doing business in many countries of the world. Their businesses, their business houses, we know, or people call them, or world calls them as multinational companies, MNCs, short form, famous, popular short form, MNCs. So these MNCs, MNCs do business in various countries. MNCs do business in various countries. And how these MNCs are controlled? How the, what you call, owner of these businesses, how the owner of the businesses control all these businesses getting on in various countries of the world by sitting at one center place. By sitting at one central place, the MNC headquarter, we may call it MNC headquarter, it controls all its businesses running around the world or in various countries of the world. They get the report, in the evening. They get the desired report, in the desired financial report by evening. If they want by evening, they will get that thing by evening. So they know how much profit they have made. The companies all over the world, companies, how much profit they have made in particular month, particular week, or on particular day. So this information they get at the one central place at the desired time. Okay. Then they can talk to their manager of business by using modern technology. They can talk to manager, any manager of their business in the world, and give him instruction or take desired information from him. So this can be done. This is very wonderful and very, very beneficial to the world business. Headquarter people, they sit at one center place and ask for the information from the business manager, and also this headquarter place also gives instruction to the business manager of any country of its business. So, and that too, another wonder of technology is that too, face to face. Both the parties will come face to face. That headquarter people, the manager sitting there, head manager sitting there at the headquarter place of the MNCs, that gentleman and the manager whom they want to talk, whom he wants to talk, he will be face to face. And that controlling manager sitting at the headquarter place may pass on instruction to him to do this way or that way, or may also take desired information from him. So this is the benefit of rather bounties of modern technology. We must thank modern technology for giving us such a what you call grand bounties. Okay, this is one thing we have to remember. And another thing, that the nations all around the world, all nations, or majority of the nations, they have removed, thanks to the efforts of the central body of the world, that is, these countries or nations of the world, majority of the nations of the world, we may call them as members of the agreement that UNO's body or some wing of that body, central body, has put forth before the world nations. These are the things you remove your what you call, let all countries come together and have what you call sailing place. One country will have sailing place in your country, and your country will have selling place in other countries. That way. That means what actually they want to say, remove the restrictions, remove the trade restrictions, because everywhere, for every nation, there is international border, and one individual or goods cannot cross that international border without the permission, proper permission of that government. From where they want, from their boundary, they want to cross their country. So this is government permission is required. This is in the olden days, but now because because of the what you call efforts of the commercial wing or trade wing of the UNO, now majority countries, they have come together and agreed. They have agreed. What they have agreed? We will remove restrictions. We will allow the goods of the other nations to enter our nation or country, and such goods can be sold, or those people, the owner of those goods who live in other nation, they can sell such goods in our country and earn the money. That way they agreed, nations agreed. So all have agreed to what you call remove the what you call restrictions on the movement of goods from one country to another country. So what happened? What is the result? Because of such agreement, what is the result? The what you call, as I told you, restrictions have gone, disappeared. Restrictions have disappeared. Boundaries disappeared. Now goods freely move from country to country, and this what you call manufacturer or seller of those goods can sell his goods not only in his own country but also in other countries also and earn the money. So other nations will get the goods which they cannot produce in their own country, and the country which sent the goods to other countries, they will also receive goods from other countries which they don't have in their own country. So such type of what you call movement of goods, that brings benefit to all what you call all concerned, all people of the world, all people of the countries who have signed this agreement with the trade wing of the UNO. So we must thank the what you call this modern technology as well as the policy of the governments, various governments. Policy of, they call it policy of liberalization. Policy of liberalization. That means free movement of goods from country to country. So this is one aspect. Now, when we got fair idea about this what you call technological development and the what you call disappearance of the trade restrictions, so after this, what is the effect? What is the effect of these things? So they have agreed. Now, question before us, it is like this. The goods will come in our country or goods will go in the other countries, and the man who sends goods in the other country, he will have income in the form of sale of those goods, and he has to pay tax in that country also. And the goods coming to our country, the man who is sending here, he has to pay tax on the goods he is selling here and getting money for the sale of goods. So that tax aspect is involved in free movement of goods from country to country. Now, question is that when there is technical development, when there is free movement of goods, when there are cries of friendship among the nations, and nations support the good behavior, good moral behavior among the nations, all member nations, those who have signed this, what you call, or those countries who have signed this, charter, they cry for friendship among the nations because we have come closer, and because modern technology has removed the distance, and we can see each other anytime, face to face, though you are living in America and I am living in India. So still, any moment we can see each other, talk to each other, and do business also online. This is called online, use of technology. So the question comes to our mind when such technological development has taken place, when there are cries of friendship among the nations, when the nations think about the good behavior with all nations, not only with neighboring nations, with all nations of the world, when they talk in such a, with such a large heart, and then why they follow, the question comes, why they follow what you call different tax systems. Why they follow different tax systems? One tax system for their own people and one tax system for foreign people, other people of the other nations who do business in country. So why they talk in terms of resident and non-resident? This is precisely the question before the inquiring mind. Technology, liberalization of trade, all these things are there. Then there are support of the world nations for the friendly or good behavior with each other. When everything is there, positive atmosphere is there around the world, so why nation talk in terms of what you call resident and non-resident? Resident and non-resident. That is the honest academic question before the inquiring mind, like you and me. So let us proceed and find out the interesting reply for our honest question. What the interesting reply the world body gives and the world nation give to this question, to our question. What reply this world body as well as the world nations or member nation to the trade agreement of the they give. That is interesting to note. So let us have what you call explanation by the world body. World body, and your view on my view. The view of world body, your view and my view, they are same. They are same. World body doesn't want what you call different tax system. On the contrary, it supports uniform tax system. World body doesn't like that, doesn't like the fact that the local should be taxed at lower rate and the national of other state or country should be taxed at higher rate. The central body, body doesn't like this. You also don't like, or any reasonable man will not like this discrimination or difference in tax treatment. So, world body is with us. World body is with us and making very serious and sincere efforts coming to uniform tax system, UTS, uniform tax system or tax system where income tax rates for earning by the non-resident. Non-resident means the person who is not living in our country, he is living some other country and sending goods here or doing business here and earning income. So these people are non-resident people. So this body, while giving answer to our question, honest academic question, they say we are with you. We don't want different tax rates for different people. Local people, foreign people should have the same tax rates. It is our view. Okay, so we now heard the view of the body, what it has to say on the what you call this different tax systems, when everything around the world is positive for coming together, doing good business, everything, to increasing the comfort of the human beings all over the world, the motto of the isn't it? So, in this positive atmosphere, this type of thing, you are resident, you are not resident, you are non-resident, you have to pay higher tax, and our people will pay, our taxpayer will pay lower rate. This type of thing is not advisable. This is what the body body says, and we agree with that, and they agree with that. So all we agree for uniform tax system and uniform rate for all individuals, our country's individuals, taxpayers, and the taxpayer of other countries. Anyhow, so this is the reply of the for our honest question, honest academic questions. Why there is not a uniform tax system? Why there is not same tax rates for the locals and the outsiders that way? So that question has answered, and we heard what they have to say. Now we'll go to nations, member nations, members who signed the agreement for the trade wing of the body. So what they have to say for different tax systems or different tax rates, lower tax rates for their own people, higher tax rates for the outsiders. So what they have to say, we heard. Now nations, member nations, what they say, see, their argument is like this. They give two justifications. These member nations give two justifications. One justification is sovereign power. First justification is sovereign power, and second justification is source rule. Sovereign power is first, source rule is second. These two they offer, member nations offer these two justification for not subscribing to the uniform tax system where tax rates will be uniform. So world nations or member nations, they give these two justifications. Now we'll see what is, we would see what is sovereign power. The first argument or justification of the world member nation is we are sovereign. We are sovereign power. And what is sovereign power? Sovereign power. What is sovereign? Sovereign means supreme. Sovereign means simple word supreme. All supreme. He can do. That sovereign can do and undo anything or many things. This is called sovereign power. So sovereign power, member nation, they use the sovereign powers, and they say we would not listen to you. We would not listen to you what you say if it is against our financial interest. If something you propose here, something is proposed means has proposed uniform tax system. So world nations, by using sovereign power, what they cry or declare, will not listen to you if your advice is against our financial interest. So this is the reason they give. We will not agree. We will do what we feel is right. We will do that thing which we feel is right. If we don't feel right or not in our financial interest, we will not accept that thing. Here, remember, here this is the direct or indirect reply to the proposal, uniform tax system, which includes uniform tax rates for locals and outsiders. So they say it is not in our financial interest and we will not follow your policy, we will not submit or will not surrender to your persuasion to have uniform tax system. This way we can convey or tell. This is the stand of the member nations. The first justification, we are sovereign power, supreme power, independent power. We will do what we want to do. We will not listen to anybody when something is against our financial interest or against our military interest. Anything. We are sovereign. That is, assertion is that, repeatedly telling is that we are sovereign power. Sovereign means supreme, just like king. King, nobody can challenge the king like this. Nobody can challenge. Other nations, they have to submit, simply say, Baba, you are sovereign, okay, do whatever you want to do like this. They will leave him that sovereign power there. There and they will mind their own business. Okay. So sovereign power is the one justification that the world nations offer to the people like you and me and body that will not subscribe or to this uniform tax system where tax rates will be uniform for locals and outsiders. Okay. Then they have got second justification. They have got second justification for not accepting UTS, uniform tax system proposal given by the proposal of the world body. This second justification is source rule. Source rule, under source rule, their justification, the member nation justification is like this. A person from other country, he comes to our land. He earns income by staying in our country. He earns huge amount of profit or income in our country by doing business. No doubt he makes the efforts. He does all these things necessary to earn the income. Okay. And goes back to his country with all the money he earns in our land without paying a single paisa to us or without paying any amount of tax to us. He goes straight back on the money and goes back to his country with all the money in the bag, put in the bag and goes back. So this sovereign country who advocates the rule of source rule says, we will not leave him. We will not leave him. He will not leave him. They say, you are earning in our land lot of money and that you don't pay any tax to us. It is not good. We are sovereign power. So we will use the principle of source rule That is the rule of source rule. That is source rule. Source rule means your source of income is in India or in our land. Suppose other country is there. If we are talking about other country. So your source of income is our country. So you are earning here and you have to pay tax. So, and that too at higher rate in many cases. That too at higher rate in many cases. So this is the second justification the member nations, world nations give to you, me, and you know. So we will not leave him under the source rule. We are sovereign and we have got this principle of source rule. We follow it. Other nations follow, so we will also follow it. This is not there. We are only following this thing, source rule principle. Other nations also follow. So that is why we are also following. So don't teach us broad-mindedness and all these things. Don't teach us. You teach those people first. Let them agree with you, then I will also agree. Like this. So these are the two justifications to our honest question. And we have heard the world body, what they have to say, what it has to say on this honest question. Then we have heard the what you call the world nations, what they have to say on this for not subscribing or surrendering to this uniform tax system where tax rates will be uniform for local as well as outsiders. So both the parties we heard. Now let us go ahead and find out this what you call source rule. The world nations depend on source rule to take the tax from the outsider. Okay. So source rule actually, in fact, source rule is the source of problem to the taxpayer. Source rule, they note down this statement. Source rule is the source of problem to the taxpayers. And what is the nature of that problem? That poor taxpayer, who cannot say poor because he is paying tax, he is having a lot of money in his hand or in his bag. So I will withdraw that word poor taxpayer. The taxpayer, source rule, they actually ask him under source rule to pay tax. So source rule is the source of trouble or problem, source of problem to the taxpayer. And what is the nature of that problem? He has to pay the tax in the country where he in the foreign country where he does the business, put the efforts, does the business, earn the money, and he has to pay tax as per the law, tax law of that particular foreign country. Then in his own country he has to pay the tax for his income from that he earns in the foreign country and the income that he earns in his own country. So there is double taxation. So this source rule, as I had told you to remember, source rule is the source of problem to the taxpayers. Source rule brings double taxation. Source rule brings double taxation to the taxpayer. Tax in his own country and tax in foreign country, like this. He has to pay double tax. So source rule brings the problem for taxpayer. So what is the remedy? Countries, they bring injury to the taxpayer, one who pays double tax, and here and there and here, like this. So countries, they take the tax under what you call justification of source rule and sovereignty, and now this fellow, who pays double tax, he has to suffer injury of double taxation. So nations, what, they also feel bad. Who? Nations. This man is paying double tax in our country and in his own country also, they feel bad. So what, what remedy they have got? They give the injury and they give the balm, B-A-L-M, balm, means some cream of this to reduce the pain of that injury. Nations give the injury in the form of double taxation to the taxpayer, and nation also offer him balm to reduce the pain of the injury they give to him. And what is the balm? What is the solution these world nations offer to him, the man who gives double tax? What is the solution they offer? The solution is, sorry to tell, solution is very haphazard. It is not scientific or what you call easy on fast track basis. It is not easy to get something from the authorities. It is not that easy to give. They have to follow a number of things to get back the what you call the relief. They call it relief. The reduction of burden of double taxation. Reduction of burden of double taxation. So their remedy, their solution for double taxation is very haphazard, not up to the mark, not on fast track basis. It is lengthy procedure, paper procedure, and all these things, complications. And that much time, a man coming from outside, would we have this much time to pursue all these things? And government machinery in all countries, not in our country, government machinery is not what you call auto-moving, moving on their own without unnecessary halt. It is not, that system doesn't run fast. Okay, so the solution they offer to the man who suffers double taxation, they say, you see, we tax you at the rate. Your country has agreed with us. There is agreement between us and your country. This is the copy of agreement. This is the copy of agreement. You read it. You read it, the tax rate there. And we use that tax rate to take tax from you. So we have done not anything wrong. And if by taking tax as per your own government consent, there is no injury to you. You should not think, yeah, we have injured you or we have troubled you. We have not given any trouble. This is the agreement between your nation, sovereign nation, your sovereign nation and our country. So, okay. So, to reduce the tax burden or give some reduction in the double taxation, reduce the burden of double taxation, this is, they show the agreed rate of tax between what you call his country and our country, like this one first. And second remedy, if there is no agreement between this country, our country or foreign country, then the what you call the man what he has to do, the solution as far as our Income Tax Act is concerned, our Income Tax 1961 is concerned, solution is like this: when there is no agreement, they tell to this man who suffered double taxation, they say to that man, you work out, there is no agreement case. What I am talking to you now is no agreement case. Where agreement, this is there, agreement case is there, then simple agreed rate applied, and you should not grumble. Man who suffered double taxation, you should not weep. grumble. This is all agreed. Your nation only agreed. Your sovereign power only agreed with us. So why to cry or weep? You tell him, your sovereign, why you agreed to that thing, whatever. Anything you want to tell, you complain there only. This is not the proper place to complain, rather right place to complain. Okay. So, second, when there is no such agreement, then nation says to this man who suffered a double taxation, you calculate income tax liability. You have got foreign income. You have come to our country, you have earned some income, so you work out what you call income tax at our rate, Indian rate. If somebody comes from foreign country, he here in India, he earns income here and pays the tax at the Indian rate. There is no agreement. He pays the tax on his income that he earns in India at Indian tax rate. Okay. And he wants there also in his own country also he is liable to tax for this income also and the income he earns in his own country also. So as far as India is concerned, the solution Income Tax Act 61 gives to such a person is that Act says you calculate income tax liability, your income tax liability on your foreign income. There, suppose Indian taxpayer earns income there, pays tax in foreign country, and he comes here. He has to pay tax on that foreign income also, and the income he has in India also, double. So what Income Tax Act has to say to such person who has suffered double taxation, when there is no agreement, they say, okay, you calculate what you call income tax, your income tax liability for that foreign income at foreign rate. You also calculate what you call income tax liability for that your foreign income at Indian rate. So you have got two tax amount. You have got two tax amount. One tax amount calculated at the income tax rate of his own country, foreign country, and his foreign country. And here this income tax calculated for the foreign income at the Indian tax rate. So compare these two figures, and whichever is lesser than other small amount of tax, that you pay to us. That is the solution our Income Tax Act 1961 gives, when there is no agreement between the countries for applying or using the tax rate for taxing what you call the income of the foreign individual. Okay. So this is the source rule, is the source of problem to the taxpayer. And the nations give the injury and also give balm, B-A-L-M, to reduce the pain of the injury. So this is about the source rule. Now further, this another problem with the source rule is that source rule divides the taxpayer into two categories. Source rule divides the taxpayer into categories: resident category and non-resident category, or you may say non-resident and resident. These two categories, non-resident and resident. So source rules divide this, and source rule is what you call a well-thought scheme to take tax from the foreigner or non-resident, from the foreigner, non-resident foreigner who comes to India, earns income here. Then how to take? There should be because ours is a democracy. There should be rule, some rule, act, legal power to take tax from that foreign individual. So, source rule is the what you call under source rule government take the support, and source rule, as I told you, source rule divides the taxpayer into two categories, non-resident and resident, and source rule asks the non-resident to pay the tax. And source rule, that is our land, you are earning here on our land, and source of income is our land, and you pay the tax. So this is the justification our country gives to him, and he pays the tax. Okay. So then in many cases, source rule is used to take tax. Government uses source rule to take tax from the foreign individual. So he pays. But source rule take the tax from, in many cases or some cases, at higher rate. This higher rate only higher government applies or authority applies this higher rate, or nation uses this higher rate for foreign national only in many countries, in many cases. And for as far as their own taxpayers are concerned, they use normal or lower tax rates. So there are two different tax rates, which I have got objection, you have got objection, body has come. There should be uniform tax rates. But under source rule and sovereign rule, they have come to this conclusion. They say foreigner has to pay tax at higher rate. In some cases, not all, some cases, and nations are realizing this fact. It is not good to have two tax rates. So slowly, and the world body also agrees for their slow going or slow moving towards the uniform tax system. Okay, is also more aware about their sovereign power. Everybody is afraid about every nation's sovereign power, isn't it? So, this source rule asks him to pay, in many cases, higher rate, or some cases, tax at higher rates. And this higher rate is not applied in the case of their own taxpayer, their own or the taxpayers of their country. They take tax from such locals at lower rate. So the source rule compels legally. Source rule compels foreign individual legally under source rule to pay tax. This is the mechanism. This is the device, they say, device. Something they have brought into being. They have brought for using different tax rates to tax the foreign individual for his income that he earns in India. So source rule, under source rule, there is legal compulsion. Authorities or government can legally compel a foreigner or foreign individual to pay tax for the income he earns in India or in that particular nation, wherever he is earning in the foreign. So, a source rule divides the taxpayer into two categories, non-resident and resident. And another thing, important thing, is that this fellow, non-resident, he always remains under threat, legal threat. Remember, you note down this word or underline this word, non-resident taxpayer. Non-resident taxpayer or foreign taxpayer always remains under legal threat. And what is that legal threat for him? The legal threat is like this. Countries say, now we are taxing your income that you earn in our land. Now, at present, we are taxing only that income which you earn in our country. If you stay here for 182 days or more, if you stay here for 182 days or more, we will not only tax your income that you earn here, but we will also tax that income which you have in your own country and also in other foreign countries. See the threat. So this fellow is very much afraid. The sovereign power is after me. He wants tax for the income I have earned here, and he threatens me. If you stay here for 182 days and more, I will tax that income also, your foreign income of your country also. So this is what you call, he takes it as a threat. He takes as he will, suppose he stays, then this is very, what you call, bad thing for him. He has to pay tax on that income also, income of his own country also, or if he has got income in other countries apart from your own country, that also will come under tax system, and this government, host government, will take tax for that. So this is, he remains under legal threat. Remember this sentence, he remains non-resident or foreign taxpayer remains under constant legal threat, and the nature of threat, legal threat is like this. Countries say, if you stay here, now we are taxing your income that you earn in India, but if you stay here for 182 days or more, we will not only tax income that you earn here, but we will also tax that income which you have in your own country and other countries also. So this is serious threat, serious legal threat to this fellow, non-resident or foreign taxpayer. So he runs away from the country. He doesn't say, what is the remedy? What is the remedy for him to avoid this eventuality, to avoid this, what you call, risk of high taxation? To avoid the risk of this high taxation, he has to disappear. He should not. He should leave before completing his stay of 182 days in India. Okay. So this is a source rule and sovereign rule we have discussed. Now, sovereign rule, foreign taxpayer pays the tax under the sovereign rule. It divides the taxpayer into non-resident, resident. Okay. Now, these are two justifications, and what you call, we are coming back to our main topics. What Income Tax Act 1961 has to say about these phrases: non-resident, not ordinary resident, non-resident Indian, and resident. We started with these phrases, and before, what you call, understanding or getting familiar with what they want to say to us, or what the acts want to say on those phrases, we peeped into the history of these phrases. This technological development, liberalization policy of the world nations, then there is UNO's efforts to have uniform tax system where tax rates will not be different, but tax rates will be same or uniform for local taxpayers and taxpayers of the other countries. Then coming down, then the justification that the world body has given, and the justification that the world nations have given, and the device, the mechanism they brought forth for taking tax from the foreign individual, that we have learned, that is the source rules. Under source rule, that they tax the land, take the tax, and source rule is the source of problem to the taxpayer, because he has to pay double tax. Then after this, we have also have something about the what you call this source rule divides the taxpayers into non-resident and resident, and takes tax from the non-resident at higher and resident at lower rate. So after this, now we'll come to our own normal discussions of these four phrases, that is non-resident, not ordinary resident, not resident Indian, and resident. What are these four terms have to say to us? Let us hear them. First, non-resident. Non-resident, remember the background I have told you, that again that background only you understand this thing, the what you call these phrases, four phrases, what they have to say to us. Non-resident. Non-resident as now let us what you call this is what these four phrases, what they have to say. We have to listen to our what you call Income Tax Act 1961. Income Tax Act 1961. So non-resident tax, Income Tax Act 1961, Income Tax Act says non-residence means a person, a foreign individual. He stays in India. He comes in India. He does some business here, and he earns the income, isn't he? So, if he stays for a period up to 181 days or less, if he stays in India for period or periods, see legal word, period and period. And they have implications also. Implications mean effect, danger. That effect means danger. Period and periods. So some danger is there. You have to be very careful. Like this on the highway or somewhere, some board is there warning, be aware, all this thing. So here also we have to be aware. Why these two words, period and periods? So income tax says a non-resident person is a person or individual who stays in India for business purpose or for earning income here up to period or periods of duration of which is 181 days or less. Here, thing to be remembered is that foreign individuals stay in India should be maximum 182. That thing you must remember. This thing, Act says, Income Tax Act 1961 says, a person, we may call him as non-resident if his stay duration in India is up to 182 days or less. 181 days and less. That way. So, this 181, what will happen? What would happen if he stays 182? His residential status will change. he will not remain non-resident, because definition itself says a non-resident is one who stays in India up to duration of 181 days or less. So he has to stay here for period and periods up to 181 days. He need not be in India continuously for 181 days. He may come to India for some days, he may go back again after some time, he may come. It is all in terms of earning year. Remember this, it is all this period, 180, how to count, it is with reference to the previous year. They call it officially previous year. For our simple earning year. This is the earning year. There are two things, earning year and then furnishing of return. What you earn, you have to show that earning to income tax department. This is my earning and this is the tax I paid, that way. So that called its assessment year, and this is that is assessment year, and this is earning year or previous year. So this is simple thing, earning year. So this Income Tax Act says he should not be in India for continuous period of 180 to 81 days. He may be here for few months, 3 months, 2 months, like this. He may go back, he may come again. So total coming going in previous year earning year, it should not go beyond 181 days. If it is within 81 days or up to 181, he is non-resident. Okay. So non-resident we have learnt. Now the specialities, the feature of this non-resident are like this. He has to pay tax only for that income which he earns in foreign land. A non-resident has to pay tax, income tax, for the income he earns in foreign land only. Then he should not pay tax. He should not pay he should not furnish return. He has paid the tax. Normally, a resident has to pay the tax and also legally has to furnish the income tax return. But non-resident, there is no liability for him, or there is no legal compulsion for him to furnish the income tax return for his income in India. For his income in India, he need not furnish, and for payment of tax for this income earning and payment of tax for Indian earning, he need not furnish income tax return. A non-resident is not required. He is not required to furnish income tax return to the department, income tax department. Then third thing, non-resident, as I told you, normally he has to pay tax higher rate, at higher rate. That higher rate is not used to tax the local taxpayer or the taxpayer of the country which takes tax from the foreign taxpayer or foreign individual for earning income in India. Not only, many cases that difference is there, and is going to slowly that difference will vanish slowly, but it is still there in many cases. So he need not furnish return. Who is a non-resident, I explained you. He need not furnish return, and he is taxed only for his income that he earns in India. This is about non-resident. Now we'll go to not ordinarily resident. Not ordinarily resident. In short, will use what you call short form NOR, not ordinarily resident. That's like what you call non-resident NR, and not ordinarily resident NOR, NOR. So we'll use NOR for sake of convenience. So NOR is what you call, he is basically non-resident. Basically, he is non-resident. Government takes the tax, income tax department takes the tax from him as it takes tax from the non-residents. In other words, tax rate which department uses, income tax department uses for taxing non-resident, the department uses that tax rate to tax this NOR also. So this is one thing. Then he is like NR, and he pays the tax as non-resident pays the tax. Government what you call gives same tax treatment to what you call, government uses the same tax rates for non-resident and NOR, not ordinary resident. Okay. Then third thing about this variety, that is NOR, he need not file what you call, he is not to furnish income tax return like NR. He is not to furnish income tax return like NR. Now fourth thing, fourth thing is important. This NOR variety, he is a problematic person, individual rather. Not ordinary resident is a, remember this thing, sentence, NOR, non-ordinary resident individual, is a problematic person or individual. He is problematic individual to the income tax department. And what the problem he present to the department? NOR stays in India. I am talking about in terms of Indian, rather we are discussing these four phrases in terms of Indian Income Tax Act 1961. Okay. So NOR is the rather problematic person to the income tax, or problematic individual to the income tax department. And what is the nature of problem? What problem he gives to the income tax department? He overstays. He stays for 182 days and more in India. Normally, non-resident should stay in India up to 181 days and less. This NOR, what he does, not willingly, not intentionally, without any what you call profit motive, without anything, just simply due to what you call weak memory or busy working schedule or so many other justified reason, he stays for period of 182 days and above. That gives him the status of resident. The moment income tax department asks him, you have become resident, and resident has to pay tax not only on the income, resident has to pay income tax not only on the income he earns in India, but also the income he earns in other foreign country, in his own country as well as other countries. So then sweating starts coming. Then this non-resident, the acts call him NOR, not non-resident. Then he starts sweating. Oh, I will lose this much amount, heavy amount, lakhs of rupees. So he is very much worried. Then, because at his heart he is innocent, in the sense, because of his busy business schedule in India, he could not remember when he came and how much period he stayed here. Huh? But department doesn't leave him like this. Simply he says this thing, and okay, you go. Don't pay tax to your other income, that is the income of your own country and the other countries where you have got income. Don't pay, you go. It is not a department. Department doesn't leave him like this so easily. So, what then department asks the questions to him. Department asks the question to him. You say, I am non-resident. I am non-resident. I am not resident. Though I have stayed in India for period up to or more than for 182 days or more than 182 days. So no doubt I have become, for tax purposes, my status is resident and not resident. Okay, like this he takes the stand. So income tax department asks him to submit the proof or ask him the questions like this. First question, they ask the questions, and if they get the reply or get the proof, we will use the word proof, documentary proof. If they get, department gets the proof, documentary proofs from him, which is in his favor, then they will leave him. Department will leave him and declare him as, yes, you are not ordinary resident, not ordinary resident. This is also one of the statuses. The what you call Income Tax Act 1961 talks about. So what are the proofs that department asks from him? The first thing they find out, who income tax departments, if he gives the proof to us showing that out of 10 last years, 10 past years, if he is in India for 9 years as non-resident, if he is in India as non-resident for 9 years, out of 10 past year, gone 10 years, if he is non-resident in 9 years out of that 10 years, then okay, he is not ordinarily resident. This is one way of deciding his residential status as NOR. Okay, he gives the proof, department accepts the proof, and he is decided as, or is declared as NOR. Okay, not ordinary resident. Then second, if he fulfills first condition, okay. If he doesn't fulfill this condition, then second option or second proof the department asks him to give. And what is that second proof? Department says, if you are in India for last, if you are in India for 729 days, if you are in India for 729 days out of 9 previous years, 9 last years, out of 7 previous years, department, if department finds like this, his stay in India is for 729 729 days during last 7 years. Then he is declared by the department as NOR. If he gives the necessary proof to the department and proves that, yes, 729 days out of 7 years, last 7 years, I was non-resident in India. So department says, okay, proof is there, proof is okay. They declare him or decide him as NOR, non-ordinary resident. So this is a person, individual, who huge problem to the department for doing all these inquiries and all these things. Otherwise, he has to suffer heavy taxations because of his world income. Anyhow, so this is another thing. Non-resident who have got idea, then not ordinary resident who have got idea. Now another variety, another version of this status that Income Tax Act 1961 talks about is non-resident Indian, NRI. I think we must have heard this NRI. NRI word is very famous. He is NRI. He is NRI. Our neighbor is NRI. My friend is NRI. So government has given concession to NRI. So NRI, the government gives many concessions to NRI. Okay. So what income tax talks about this NRI, it is like this. NRI, the act says, NRI, as the name suggests, and not resident Indian. Indian who is not resident. NRI means Indian who is not resident. NRI means person who is Indian but not resident. Now who is Indian now? Why NRI? Why not resident? He is not staying here. He is not at all staying here. He stays there permanently in some foreign country. But our country calls him, he is Indian. Our country is proud of him, and that NRI is proud of our country. This is sweet relations. Okay? So, Act says NRI is Indian who is non-resident, and who is Indian. So, Tax Act says Indian means a citizen of India, in terms of the provisions of Indian Citizenship Act. A person is citizen of India. Indian means a person who is citizens of India. And how you will decide whether he is citizen of India or not? So we have to look into the provisions of Indian Citizenship Act. That will guide you how to decide his status as Indian citizen. And Indian means a citizen of India. And Citizenship Act is the proper act to decide whether he is citizen of India or not. Okay, this is first thing. NRI first, he should be citizens of India. Then, or not then, or the second test is that Indian, to be Indian, to call him as NRI. The second test is that Indian, he should be citizen. Then second thing, he should have been born, or he was born. First condition, he was born in undivided India. This NRI was born in undivided India. Or first citizen who is Indian. NRI means a person who is Indian but not resident. And who is Indian? So Indian is a person who is citizens of India as per Citizenship Act Citizenship Act, under the provisions of Indian Citizenship Act. Then second condition is that he was born in undivided India. He was born in, or he was born, this one citizenship, or he was born in undivided India, or his grandfather, not grandfather, or his father or his mother was born in undivided India. First, he was born in India, or his mother, if suppose he was not born in undivided India, then he born there only in the foreign country. Then second test is his mother or his father or his mother was born in undivided India. Or if that is also not possible, then third, or his grandfather or grandmother was born in undivided India. So if case is like this, so that individual becomes NRI, non-resident Indian. Indian who is not resident. NRI means Indian who is not resident. So Indian, we have to find out like this. First we have to go to Citizenship Act and find out his citizenship. If he is holding Indian citizenship, so he is NRI. He is person, he is citizen of India, or individual of Indian origin. And Indian origin means either he should be citizens of India, or he should be his origin should be in India. And what is his origin? How to find out his origin? Like this: he should have been born in India. If this is not there, then his grandfather or grandmother should have been born in undivided India. If this is not the case, then last one is his grandfather or grandmother should have been born in undivided India. If these things are there of Indian origin, if he is a man of Indian origin, and Indian origin means these three things: he was born in India, or his grandfather or grandmother born in undivided India, or his grandfather or his grandmother was born in undivided India. So if he fulfills this one of these three things, he becomes the man of Indian origin, and he is NRI then. Okay. He becomes NRI by virtue of citizenship. He becomes NRI because of his origin. So all these things were learned about NOR. So this NOR is, for all purposes, he is non-resident. For all tax purposes, he is not non-resident. And he is not to furnish income tax return to tax department, Indian tax department. Then the tax rate for him and for non-resident are the same. The tax rate that department uses for non-residents, the same tax the department taxes this NRI also with that same tax rate, and he need not furnish income tax return. But one thing, he being what you call person of or individual of Indian origin or citizens of India, he rather enjoys some favors from the country of his own origin. That means India. Indian people living abroad, earning money there, or have got permanent residence there, but their origin in India, they are citizens of India. So government gives some favor, shows some favor to them, these NRI people. So NRI, they enjoy the concessions from government in terms of investment options. There are so many types of investment. Government offers them, tax department offers them, and they can have the what you call good earning. If they invest money, their foreign money, dollar or whatever foreign money they have got, they invest in India. The government assures them good return for their investment. So they have a lot of investment options. Government has offered them because of their residential status as NRI, that is citizens of India or man of Indian origin. So this is all about what you call NRI. Now we have up to this we have learned non-resident, then not ordinarily resident, NOR, then NRI, we have also learned NRI, non-resident Indian, then last one is resident of India. This, we are all resident of India. All taxpayers here, mostly, majority taxpayers are resident. And conditions to call one as resident is simple. He should stay in India for 182 days or more. Then he becomes a resident of India. This is all about individual. Then what about these things? HUF, Hindu Undivided Family. Then AOP and BOI, Association of Person and Body of Individuals. What about this? How to find out their residential status? HUF, BOI, AOP, and your firm, partnership firm. How to decide their resident status? When they become resident? Act says, if their manager stays in India for 182 days or more, he is resident. That firm is resident, that AOP is resident, that BOI is resident, and that firm is resident. Okay, it is like that. And what about company? Company becomes resident if his place of registration is in India. If a particular company is registered in India, it is resident company. It's simple. So this is all about your resident. A resident has to pay tax for his income that he earns in his own country, that is in India, and also resident has to pay tax for his income that